Yo, what's up, people? This is your boy, Mr. Forex. Today, we're going to cover something to do the liquidity. Okay, liquidity is a bit something that most people struggle to understand. And today, I just want to give you a clue on how you can go about it. And whenever you find time, go to your charts and try to go through it. So, how do you identify liquidity in the market? The fund of the market, if the market's bullish, right? For it to continue buying, it must sell fast, right? In other language, we say that if you go to the market, for you to buy, first the seller must be there, right? And for the seller to sell, they must find a buyer to sell to them. So the same thing happens in the market. For a bullish uh, price in the market, if we say that the market is bullish, for it to continue buying, it must first sell, all right, the orders to a lower discount level, up to discount, then it can buy again. When it's buying, this means that when the price goes up, just takes out this high. This, as much as we look at it as a breakout structure, this is just a liquidity high. Once it takes out this low, I mean this high, price must again create a new low, right, or break this one. It has two options, either to create something like this, go up, break this one, and come, take out this low, right, and again go for this one. You see that, and go to the upside, or else it can drop even to this low, take out this one, and go to the upside again, because all highs and lows, they contain what we call liquidity levels. They contain the liquidity levels like that. The liquidity lying there. Down here, there's a liquidity lying down here, because we call them liquidity because the moment price drops, somebody is selling here. You see that? And the moment price buys, somebody is buying here. And they put this where they put the stop loss. So those areas where you put your stop loss, that's where the liquidity is. And you can see again this price, you can see the price generally is bullish, but again it's trying to sell back to a discount for it to buy again. Now you can see this higher again, it contains liquidity there. You see that? Again, this low contain liquidity altogether. So you can see price breaks up to take out all this liquidity, and it drops down. Maybe it might want to push to this level, or sometime it can retrace back to discount and it buys again just to take out this liquidity. Then when it drops again, it can run into this liquidity here and again push to the upside with the reason of taking out this buy side liquidity here. Using that, collect that level, and again price can drop again and hunt. This was the last liquidity that was left. Hunt this one. Once it takes out this liquidity and runs to the upside to take out all these stop loss up here. And this is how you identify liquidity. Just by knowing liquidity, just the first step of the moment you're aware of where the liquidity is, it gives you at least a confirmation to know where the price is likely to go next. At least you have to have a high time frame bias to understand the direction of price, like the trend. Then from there, you can position yourself somewhere and you will easily catch a good move. But at least also, when you miss the trade, don't chase. Always wait, because the market will always create liquidity. For example, if the price, let's say that on the high time frame, the high time frame bias, the price is bullish. Now on the lower time frame, or anytime you see the price going up, right, and create something like this and takes out this high, most of the time, even if it's going to sell, it will not sell much, right? It will not come down much. But if you see the price do this and goes up again and break this high, it's just liquidity. And I mean, breaking this high, as much as we look at it as a breakout structure, the liquidity is here. But the moment it will take out the liquidity on this other side and it align itself with this high time frame zone here, okay? When it align itself with the high time frame zone here, possibly you will see the price runs to the upside with a bigger move, a lot of volume, because all the price, everything is being pushed to the upside. So the moment price takes out the liquidity on the lower side, it will give you a bigger move to the upside. The same way for the bearish price, if the price on high time frame bias, the price is bearish. And let's say that the price do something like this and goes to the outside to break the high there, give you a small retracement and goes downside again. give you something like this, okay? Because the price breaks here, but it retraces a little bit and it drops again. But the moment price will go up and take out this high, all right? This high. And now it means that this basic liquidity has been taken out, and now the price has aligned itself with the high time frame zone. High time frame direction bias. It will give you a good push to the downside. So let's go to the market and try to check these levels here. And let's come here and try to look at these levels, yeah? Now, before that, I would like to use the Go charting. Like, I think it will give us a good push. So let me open the Go charting website. We can use that one. Okay, right now we are doing something here with some members. So allow me to first get rid of these things. Yeah, this was my way of doing things. I was just trying to check the charts later. Sometimes back. So let's see what is here. Now on this level here, we can see just to take a little part of this structure. For example, I like using the starting from the highest point. You see, this is the highest point. And let's start from this. If this is a high point, let's start from this side. So I'm going to cut a little bit here, right? And let's come back here. Let's see. Let's see. You can see this price has been bullish. Ask yourself, why is this price bullish like that? You'll find that on the left, there are so many levels that this price is just taking out, yeah? Because if, for example, allow me to do something here. You see, if the price is like this, okay, this point contains liquidity, all right? This point contains liquidity. This point liquidity. And the same way, these lows also, they contain liquidity. So if you see the price is bullish there, right? If you see the price is bullish, this means that when the price was bearish, right? When the price was dropping, was leaving these highs. There, people are selling because you have to sell high and buy low. So the price people are selling there, selling there, selling there, right? Selling there and selling there. So what does it mean? It means like the structure now looks like this. I know it will not be clean as you expect, but at least you see this high, okay? Contain liquidity, and this level will always extend to the right because the price will always hand those levels later. You see, those are the levels you have to be very careful with, like that. You see that? So those are the highs that you expect the price to come to later on, because when it's dropping, all these are just liquidity zones that are being created. So later on, when the price it's done with the sell side liquidity and start handing the buy side liquidity, that's why you see price go up, collect this one like this high, takes out this one, and it drops a little bit so that it creates a new spike here, a new liquidity goes up. When it takes out this one, right, this is the previous low, and it runs to like the end of this liquidity like that, and it creates something like this, goes up again, comes down, retrace back, take out this low, and fuel itself into this liquidity. And remember, in the process, it's also taking out the previous side. This is the previous side being taken out, price retraces a little bit and runs to this liquidity. I've seen that. Price runs to this liquidity, I give a retracement and runs to that one. And when it finishes, like here, if it finishes here, allow me to do this, if it finishes here, so we're going to delete all these lines. You have seen the way the price was moving there. So allow me again to delete these lines. Yeah. Okay, these two lines so that we can have again something to show here. And this is something that just go to your chart during your free time and try to see it. Yeah, okay. Try to see those levels. You see, the moment price is done with those liquidity from the uptrend move, again, where's the liquidity? You find that when the price was going up, when the price was going up, it was leaving liquidity like on this low, right? Here, 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 and here. So what happens? The price will start repeating the same thing, taking out those previous lines of liquidity, those points of liquidity. You see, price give you something like this, go up, drops down, take out this liquidity, go up, collect this one, and runs into this one. You see, goes up, retraces back a little bit. It comes here, comes back here, so that it takes out this liquidity and runs into this level. Again, give a retracement, drop a little bit, takes out this level, runs to this liquidity, creates something like this, retraces back and runs into this liquidity. And again, after doing that, you find that again, market has just finished all the bullish liquidity and has created the bearish liquidity. And what happens? The market repeats the same pattern over and over and over. So once we delete this one again, you'll note that it has just leaving the liquidity on which side? On this highs. Are you seeing here? This high. There's liquidity there. There's liquidity here. There's liquidity here. Here again. And here. So you're seeing that. So again, the price will just do the same thing and go to the upside and again hand that liquidity. So actually, at least now you have the clue. So let's go to the market and try to look at those levels. So allow me to delete everything here. Now let's go to this price. You can see this price is bullish. Why is it bullish? Look on the left here. Yeah, look on the left. Let's start from the highest point here. Allow me just to draw some lines there because the chart's not going to be so clean as you expect, but at least you'll get the correct information you need here. So if we come here, you can see this is the highest point here. Draw this line here. There's a liquidity line. Again, there's the next liquidity line and a high, right? And a high that caused the low. Where's the next one? This one. This one, because these are the level people are selling. You can see price was selling and price came back here to this liquidity and this level was acting as a resistance. But what happened? You can see price was able to run to that. All these lines, because there was stop loss, goes above them and started again dropping. Now, if it was dropping, you can remove these lines here, okay? Because already these lines have been taken out. So you can create new lines of liquidity. Look at this. Again, this is a new high, containing liquidity as price goes down, containing liquidity as price goes down, containing liquidity as price goes down, and you can see what happens. These are the liquidity lines. Price will retrace back. And again here, when the price was going to the upside, you can see these are the lows that it was creating. Look at this. Creating these lows. Points of liquidity. This one and this one. That's why you see after price runs into buy side liquidity, again it starts selling back to this liquidity. You see, this is the last line. When it's taken out, now we remove these ones. I'm sorry, guys, because I'm just trying to make something clear to you so that you can understand, okay? Once do this one, and what's the remaining liquidity? This one, and this one, and the last one was here. You see here. And this one was taken out immediately. But you can see price tries to come back to the upside. Price tries to come back. Price tries to come back to the upside, where? To these high levels, you see. Comes here, takes out this liquidity, and it drops a little bit and fail. Now this one is taken out. Again, it runs it to this one. Are you seeing that? Takes out this one, and again, you see, price drops the downside. And again, it will come back later. What is happening, you see? What is happening here? Price was able to drop down completely. But when it started selling again, this way it started selling. So it was selling, it left this liquidity, and again, generated this liquidity here and also this one here. Using that, I see immediately it came to take out this one, but these other two lines were left there. So you can see the price will try as much as it can to come back, you see, trying to push to the upside, and you see pushing to that highs. Now we can remove these two lines, this one, and you can see this was the remaining liquidity. All of them, they have been taken out. Now you can see from here, now all this liquidity, they are taken out. You can see you don't have any other line above here. So you can see once you have that, look at this. Where's the loss? Now let's point out the loss of the liquidity. This one, the buy side liquidity, sell side liquidity, this one, see this one. Now all these levels are holding orders, liquidity levels. This price will have a reason to start selling again to this lows. So I hope I'm trying as much as I can to give you a clear understanding of how liquidity looks like in the market. Now, you can see these are the levels that are heavily containing liquidity. So there's a higher chance this price will push back to these lows. Okay, so allow me just to play, to tap on the play button And you see if the price is going to cut through all these levels here. Let's see. What do we got here? Look at that. Seeing that? Price is there, runs to that liquidity, reacts a little bit and breaks. You see that? Again, look at that. Pretend to go to the upside and again drop to the downside. And as it drops, let's mark the first one is here. Okay, should not forget. The next one is here. And the third one is here. As the price keeps dropping. Now this one has been taken out. Let's move this one. Okay, what's the next one? This is the next liquidity. You see, price has cut through. That one has been taken out. Let's see if it will push to this one. Let's see what is there. Okay, let's see, boom, taken out. You see, price closes below there. And when it closes below, what happened? It creates this one, right? Buy side liquidity, and we have this one here again. This one here. Guess what price will do here? Runs to the, you see, runs to all those levels because those are the liquidity levels. Okay, remove this one, remove this one, and remove this one. There. Now, we are remaining with this low. Let's see if the price will be able to push to this low. As much as we can see, it has created this liquidity again there. So let's see how the price is going to run to that level. You see, it goes to the upside and takes out this one. This one now is out. We are remaining with these two liquidity levels. Let's see how the price is going to react to there. Price goes to the upside. You see, runs to all this liquidity. And what happens? Generate this one here. And also this one's here. And price is going to the upside. Let's see how far it's going to go if it will take out this level. Remember, that's the liquidity. We are living on this lows here. So let's see what is happening here. Price, you can see, runs to this liquidity again because price is now showing you a bearish structure, but this liquidity has been left there. So it runs to this one. This is just a new liquidity that was generated. This one is taken out. Let's see if the price will take out this low. Yeah. See, you see, everything is out. Everything is out. Now, that level has been taken out there. So we can have this one. And let's see how the price, now we can see most of the liquidity around the upside. So the prices are reason to push to the upside because on the lower side, you don't have anything. So let's see if the price will move to the upside again. There. There. You see, trying to go to the upside, and in the process, price is creating new liquidity is on the lower side here. You see that? Here. If it comes down, it runs to this one. So let's see where it will go. Possibly, you can see a lot of liquidity on the upper side. So let's see what price will do. We are not making any break of structure. We are not doing anything like a change of character or whatever. You see, takes out this one. I'm only showing you how to identify those liquidity zones, how they look like. Yeah? Let's see how the price is going to cut through the remaining one. See, there, let's see. You see, cut through this one. And what happens in the process of going down? Generated this one, and this one, and this one. Here. So up here, there's a lot of stop loss levels there. Let's see if the price will go up. Because the price now has a lot of things to take here. On the upper side, the business is now on the upper side, not the lower side. Now look at the price. Look at that. Price has now runs to, he has taken out all these liquidity zones here. I'm sure you can see that. So we can have this one that was left, this one that was left here, and all of these two were being taken out. But in the process, price has created this one because it has gone down. When it goes down, it generates buy side liquidity. See there and there. So let's see the price, which level is heavier. Let's see what is there. Price runs back to the upside, takes out that one, and takes out that one as well. You see. Now, where's the new liquidity? Again, you see there's this one, and also we have this one here. So let's see how far it's going to play. You see, goes upside and cuts through all this liquidity. That's the importance of understanding how the liquidity just lies on the highs of the price. And now it has taken out everything. So right now we can see this one is out. This one is out. This one is out. And this one is out. So we are remaining with these two levels. Let's see how the price is going to behave there. Price keeps running to the downside, yeah? Keep inducing new liquidity zones there and here. So let's see, you can see up here, there's a lot of lines. These lines, we don't see them, yeah? We don't see them, and we don't see them, but they are there, always they are there. So let's see. Okay, price creates a new low. This means that it generates new liquidity, this high, and also on this low. So you can see price keeps inducing people into that move, but up here, all these levels have to be taken out. So let's see what is there. You see, one taken out, this one is out. So you can remove this one. Again, price goes the downside and generates a new liquidity here. You see that? Again, the new one is here, you see, and start taking out those levels. See, this one has been now taken out, and look at that. Look how the price is moving. Look at that. Let's see how far is it going to the upside. Now, up to that point, I can already show you this one was taken out, this one was taken out, but in the process, we just transfer the liquidity on this opposite side. See this one here, again, this one just on this level here, and this one also has been taken out, so we can bring it here, equals, and now we are having a lot of liquidity on this levels here, there. So let's see, this one is already out, so we can remove that one. There, let's see how the price is going to react in this level. Okay, supposed to go the upside or down. It will depend on how heavy the levels are. You can see price go to the upside and cut through that one. But in the process of going to the upside, you can see what's the price doing? Price is just building new levels as it hunts these other old levels of liquidity. On the downside, is building the selling side liquidity, because most of the time price, it must buy to sell, or it must sell to buy. So you find that most of the time when it's going up, as it's going to hand this liquidity on this other side, on this upper side, most of the time, it will do what? Later on, it will have a reason again to drop to hand all these other levels here. So I might not have a good way to explain this to you, but at least you can be able to understand what I'm trying to say. You see there. Again, price can retrace back like there. You see there, retrace back, take out this, because I've told you that the price to buy it must sell. If you look at this, price break this high and sells again and takes out this low and goes to the upside. Again, break this high, look at that. Break this high, okay? Break that high, because look at this, now the structure is bullish. This is like a break of structure, a boss here. And for the price to go up, it must take out the low. Look at this level. Take out this low, and probably it has even managed to take out this one. So we have something like this low being taken out. And even it can, remember this one is a very strong liquidity level. It can even push to this low before it goes up. So let's see what happens here. Yeah, here we go. Look at that. Cut through all this low. Once this low has been taken out, and you can see, sweep there. What are you expecting? The price was, when it was dropping, it had this liquidity. It has this liquidity. It has this liquidity here. Again here. So once it has collected, you see, this one is a sweep to this low. So everything has been taken out. I'm sure from this low, everything has been swept. Using that. Now the price has a reason taking out this low to push to the upside, to this liquidity zones. This is the most reason, because remember, the price is bullish. The buyer says the price is bullish. Now the price coming on this side is not hard as going to this other side. It might cut across these levels because of where the liquidity is being located. So let's see there. You can see going to the upside. Let's see. We can see cut through this one, taken out. And when it's taken out, it has created already the liquidity here. And where? And here. Sorry. And here. Okay. And where else? Here. Okay. So let's see how the price is going to push because the liquidity is on the upper side, you see. For it to buy, it must sell first, take out the liquidity and push to the upside. So this one is already out. Move that one. Let's see. Pushes to that high. We see collect everything. Now these liquidity levels that have been taken out. This one taken out. But remember, the liquidity is just being transferred on the opposite direction, because most people are buying and placing the stop loss on the lows. And let's see the remaining ones. Hey, we have a lot up here. So this price still has a high chance of pushing to the upside. So let's see how far it's gonna go. Look at that. Retrace a little bit, and cut through. That one, you see, done. This one is done. Once that one has been taken out, where's the new liquidity? This one. And where's the next one? This one. You see, this price is here. For it to continue going up, it must sell first, because I've told you that even if you get the break of structure, get that boss there, and you still look for the price to go up. It can't go without inducement or without liquidity. It has to take out some levels before it goes up. So let's see, where's that? You can see revolve around that area, and you see there's a liquidity. You see, it takes out that level. Once it has been taken out, look where the price is going now. Yeah, because the trend is bullish. The price is now going to that levels, those levels. Look at that. Just there. You see, this one was taken out, collected for the price to go up. But where's the liquidity? The liquidity is here. The next liquidity is here. The next liquidity is here. You see there. So now these two liquidity zones have been taken out, and in the upper side, the price has just created new liquidity. So let's see how far this price will go, because this one has taken out, and you can see maybe here you have this very sensitive order block, but below it there's a liquidity. So always you have to be very careful. Now let's see, price runs to that level, boom, runs to this order block, and this the buy side liquidity is here. But because why is this price failing to come this low? Because already look at this one and the liquidity that was here. There was a liquidity here and also in this low here. So it has taken out a lot of things here. So that's the reason it can keep pushing to the upside, then going to the downside according to orders. So let's see how it's going to take out this high. It's there. So I'm going to leave it play. Just leave it play and see how it cuts across. You see that? Hope you can see that, guys. See that? And the price, where is it? The price is here. So I'm sure you can see this price has this liquidity. Everything here. And the price is here. And if you go to my setup, I'm still waiting to have a small sell. If the price, because the price when it was dropping, it created what you call the equal highs here. See, this is also liquidity. So the price to keep going up, it must sell fast. But it has sold down, but it has not taken out any low. The low of liquidity is here. So I'm still believing that this price, if it takes out the most recent liquidity, right, it might drop down to this liquidity before it goes to the upside. So this is where the price is right now. And we can see we have a reason to keep buying GBP USD because there's so many liquidity up here. So allow me to go back to trading view so that I can show you something here. Trading view. This trading view, was it trading view here? So let's see what we have here on trading view. I hope it will open because let's see how far it's going to drop. Now we are here. This is now trading view here. On trading view, I'm looking forward to see GBPUSD because you already have seen the other side. I've showed you the liquidity levels. Now I'm waiting to continue buying GBPUSD, but at least I know that price for it to continue going to the upside, it must first sell. Yeah, it must sell first. So that's why you see I'm waiting to buy on this level. But this one is already, remember, this one was being looked at as a liquidity. That's why you see I've identified this level as a mid-risk buy, but I want to buy below that level because I'm looking at this low as the liquidity level. I want to see this low being taken out. So let's see, why am I looking for a sell here? Because this high might contain liquidity, but already if the price can push to the most recent level, where is it? This is the most recent high here, okay? If it can push to that level, take out this high, then I can have a short-term sell. Then I'll go long-term. If the price comes here, and I can position myself there and push the price to the upside. So Guys, that is how I can explain that, but I'll try to get time and create a good video. So we'll continue getting in touch with this particular topic until you understand. But this one was just the first day showing you examples on how to look at liquidity and how the liquidity affects the market most of the time, why the market buys, why the market sells. So guys, thank you for your time. Make sure that you like, you subscribe and share. Leave your comment there. I'll try as much as I can to read your comments, and also make sure that you join our Telegram group. The link is on the description section. See you in the next video, and don't forget to share.